Today we're covering subtitle E of Title IV. This is the value added tax. It's a complex issue. It's nuances of tax policy. They're not as sexy as some of the other issues in the Blueprint for a Better America, but they're important parts. And so section 451 is the findings and purpose. I'd just like to start by reading the findings into the record and then talk about it in general. So subsection A, Congress finds the following. 1, the utilization of America's productive capacity has trended downward over the last 50 years as wages has not kept up with increases in productivity. The issuance of Treasury dollar bills will enable an increase in purchasing power and drive further economic development by bridging the gap between wage income and productive output. 2, issuing Treasury dollar bills in sufficient quantities to end poverty will free up additional resources that are currently being diverted to address problems spurred by poverty, such as crime and increased healthcare usage. However, these quantities may cause inflation beyond normal targets. Therefore, some of the increase should be taxed back or clawed back to remove it from circulation and fund government expenditures without borrowing money at interest. 3, wealth inequality distorts the marketplace and decreases the quality of life for citizens. A value-added tax, or VAT, is a consumption tax. Those who spend the most will pay the most. When it's combined with universal basic income, it is a progressive tax. 4, a 2011 report by the Congressional Research Service concluded the imposition of a VAT would cause a one-time increase in this country's price level, but a VAT would not necessarily affect the country's future rate of inflation if the Federal Reserve offset the contractionary effects of a VAT with a more expansionary monetary policy. 5, the United States is the only member of the Organization for Economic Cooperation and Development, the OECD, without a VAT. In subsection B, the purpose of this value-added tax is to address wealth inequality while clawing back some of the increase in the money supply. So value-added tax is a very common tax around the world. I think more than 90% of countries use it, some form of a value-added tax, because it's generally a very efficient tax at capturing a slice of the economy. In recent years, it was popularized by Andrew Yang, who brought it up as a potential funding source for universal basic income. And that is sort of the mechanism that we're using it for in the Blueprint for a Better America. As the universal basic income puts money out there, the value-added tax can claw some of it back and address wealth inequality. So this subtitle will establish a 12% value-added tax. That is much, much lower than the European average. Will bring in significant amounts of revenue for the United States. And really, the value-added tax, it raises a larger question of what is value? How do we define value? And so for the purposes of taxation, value is the difference between whatever the raw inputs are and the selling price, how much the output is selling your output. And so in many cases that comes through human labor. For example, if you buy a computer and then you spend the next year writing a piece of software that then you sell for $1 million, that was you added that value to it through your human creativity and ingenuity. But what happens if somebody else bought a computer and used an AI program to create the same $1 million piece of software? That value is still being created. But under our current tax structure, generally it only gets taxed if it's income. And so if there's no individual who is earning that $1 million and paying an income tax, then that value isn't always recaptured. And the point of the tax is to sort of reinvest capital in our society. And so as we see more automation and more development, more harnessing of artificial intelligence to produce value in our society, the value-added tax will capture that value and make sure that we're able to fund society in a to do the things that we want to do, those 5 duties in the Constitution. The legislative language in the subtitle comes from HR 6110. It was legislation that was proposed by Paul Ryan back in 2008 as part of a really broad tax restructuring package. And his proposal set up a more traditional value-added tax like they practice in Europe. But what we have in this section is a subtraction method value-added tax. How much did you bring in? How much did it cost you? And the difference is the value that you get taxed on. One of the reasons for that is while many states do have a sales tax, not all states do. And so by utilizing a subtraction method value-added tax, it doesn't add an additional requirement on those states. And it also, it makes the tax, makes it more inclusive as part of the overall business profits and less a per item fee. So I guess just to talk briefly about the larger purposes of the value-added tax is, you know, as you are successful as a business owner, as a business entity, as a company, then the 12% is paying something back, because all of our accomplishments, all our success, it's built on the achievements of the people who came before us. We have such a great country today because of all the hard work that our ancestors put into it. That's going back to Alexander Hamilton and the first Bank of the United States, and directing investment into productive capacity for the United States. That's how our economy is paying the dividends today that will be reinvested in America as through universal basic income. You know, if you think about some of the biggest and most valuable companies today, say Amazon, for example, right? Amazon's business model rests very heavily on investments by others, right? They, you know, the entire interstate system, the system of roads that allow them to deliver packages all across the country. Without those things, Amazon wouldn't be able to function. You know, the infrastructure of the internet and so on and so forth. All these things are connected. And so the value-added tax takes a percentage of the profit and can use it to reinvest back into building a better America. With that, Mr. Chair, I think that concludes my testimony for Section 451 before we get into the real meat of the value-added tax.
Yes, thank you. Yeah, a couple questions. You had mentioned doing subtraction method rather than implementing it at the point of sale, because there are states that don't have sales tax. You don't want to add that extra burden. But the vast majority of software that is used to make financial transactions, including between businesses, already fully supports consumption taxes in their software. So I don't see how it would really be any kind of major burden on those businesses to implement a value-added tax at the consumption level, or like at the transactional level, rather than doing an overall subtraction. Can you speak to that?
Yeah, no, thank you for the question. So some of the other issues with the European value-added tax, right, is everybody, when you buy something, you pay the value-added tax on it, and you know, you get a receipt. And then when you file your taxes, you go through all your receipts and you write down how much you paid on how much value-added tax you paid, and then you subtract it from what you've collected. And so there's all that extra paperwork and burden. You know, I spent years as a general contractor, and so, you know, I would have shoeboxes full of receipts at the end of the year of, you know, all of the purchases and things that I had made. And so a subtraction method value-added tax lets me just, you know, simply keep track of what my expenses were, how much I paid out, and simplifies things that way. One of the other issues is taxes. Taxes can be a controversial thing in the United States. People can get upset and angry about taxes sometimes. And so if you tax this, if you put this on as a point of sale that shows up on your receipt, then that can be a point of conflict. Whereas a tax that's incorporated into the normal operating expenses of a business de-escalates that potential for conflict. And so that is one of the reasons that subtraction method value-added tax would raise less controversy in the United States, I think.
Thank you. Will a VAT cause an inflationary or deflationary spiral?
It will cause some inflation, as the finding the Congressional Research Service concluded. It would be a one-time increase in the country's price level. I got a chart. Let me see if I can share this here. This is a chart of Japan's inflation rate over the last 10 years. And so their inflation was very low, and all the economists said, oh, you got to get your inflation up to 2%. That's a healthy amount. And so in 2014, they bumped their value-added tax rate up from 5% to 8%, purposely trying to spur some inflation. And as you can see, in 2014, they did that 3% bump did correspond to a 3% bump in prices. But then once that got baked into the system, it went right back to where they had been before, and it didn't cause an ongoing issue. And so that's exactly what we should expect here in the United States, is a one-time bump in prices. There's been some research in Europe where, as there have been increases in the value-added tax, that they found that sometimes as little as 55% of it ultimately gets passed on to the consumer. That but businesses who want to stay competitive sometimes will absorb some of the costs in order to keep their prices low. And this is another advantage to the subtraction method value-added tax that a point of sale tax wouldn't have.
Thank you. And will a VAT discourage business growth?
I don't think that it will. I don't think that people will feel, I'd be happy to work more if only I could, if only I wasn't paying as much tax. Because remember, this goes hand in hand with universal basic income. We're going to be creating new demand for goods and services through universal basic income. And so if you're a business owner or a would-be business owner, there's this money circulating out there. And so you want to get your bucket and see how much of it that you can scoop up. And as we've talked about, so many other countries around the world already use the value-added tax, and they have productive economies as well. I don't see this as discouraging business growth.